Alright, welcome back to the Tech Frontier, episode 311. Mark here. And Jenny, you know what time it is, right?
Oh, it is NVIDIA time, Mark. And what a time to be talking about them. My feed is just, it's all NVIDIA, all the time right now. So for our listeners who might, have been disconnected, what's got everyone buzzing?
Oh man, buzzing doesn't even begin to cover it. We're talking about, a seismic shift in the GPU market from Q1 2025. NVIDIA, the green team, they dominated, hitting an almost unbelievable 92% market share in discrete GPUs. Seriously, think about that for a second.
92%? That genuinely feels historic, doesn't it? I mean, we've seen market leaders, but this is a whole different level. So, what happened to AMD? And Intel, for that matter?
Well, that's where the story gets really, really interesting, and frankly, a bit brutal. AMD, their closest competitor, plummeted to a mere 8% share. 8%! Their lowest ever. And Intel? Officially at 0% in discrete GPUs for the quarter. It's like they weren't even in the game. Just gone.
0%? Wow. So how did NVIDIA pull off this commercial extermination, as some are calling it? What was the secret sauce, if you will?
The secret? It's more like a multi-layered masterpiece, Jenny. First, timing. NVIDIA launched their RTX 50 series GPUs, the Blackwell architecture, in volume right at the beginning of Q1. We're talking January. They were ready, AMD, their RDNA 4, the Radeon 9000 series, didn't even hit shelves until March 6th. So already a huge gap.
So NVIDIA had a 2-month head start in a critical quarter. That alone would make a difference, but 92%, that implies more than just a head start, doesn't it? It has to be more.
Exactly. That's where the second, bigger secret comes in. Supply chain mastery, especially with TSMC, the foundry that makes most of these chips. And this is where NVIDIA's AI revenue becomes their superpower. Think of it as a flywheel effect. Seriously.
Okay, a flywheel. Break that down for me, Mark. You're saying AI profits are directly impacting gaming GPU availability? That sounds like, a cheat code, if I'm being honest.
It kind of is, actually. NVIDIA's data center and AI business pulled in over $12 billion in Q1 alone. That kind of revenue, that kind of cash, gives you serious leverage with TSMC. NVIDIA secures far more wafer allocation on the cutting-edge 4N and 5N nodes. We're talking 35% of the total capacity, compared to AMD's paltry 12%.
So NVIDIA has the money to basically buy up all the premium chip-making capacity, which means they can just make as many RTX 50 series cards as they want for gaming? That's supply chain dominance right there.
Pretty much. John Petty, the legendary industry analyst, he put it best. He said, "The gap isn't about architecture quality. It's about supply chain mastery. NVIDIA sold GPUs because they existed in volume. AMD had demand but no wafers." Quote, "It's a mic drop moment, honestly. It tells you everything you need to know."
Wow. Supply chain mastery. And you mentioned AMD's catastrophic miscalculation earlier. What exactly went wrong on their end beyond just being late to market?
Oh, AMD's story is a masterclass in what not to do. According to Petty, their decline stemmed from failure to predict demand 6 to 9 months in advance and the necessity to balance TSMC allocations between Zen CPUs and Radeon GPUs. Quote, "So they, underordered GPU wafers by millions of units. A huge misstep."
They thought gamers wouldn't want new GPUs? In Q1? After the holiday season? That just feels like a basic market misread, doesn't it? Retail 101.
It's worse than that. While gamers were clamoring for new GPUs, AMD was directing most of their precious TSMC capacity towards their Zen 5 CPUs. So, they shipped fewer than 750,000 Radeon 9000 series units, compared to millions of RTX 50s. They simply didn't have product to sell, even when demand for their RDNA 4 cards was reportedly unprecedented, after launch. It was, honestly, a shock.
So AMD lost out because they were effectively cannibalizing their own GPU supply for their CPU division. Meanwhile, Intel just didn't show up. What happened to Battlemage? Did it just vanish?
Intel's Battlemage GPUs, which did launch in Q4 2024, suffered from restricted availability and, frankly, continued driver immaturity. Gamers just weren't, adopting them. So between NVIDIA's early launch and overwhelming supply, and AMD's self-inflicted wounds, there was simply no space left for Intel to move in. They were squeezed out.
It's like NVIDIA rolled a 20-sided die and got a critical success on every single front. And this AI flywheel, David Atkinson from Tech Insights said, NVIDIA's real secret is turning gaming into an AI on-ramp. Every RTX 50 series sale adds a developer to CUDA's ecosystem. Quote, what does that mean for the average gamer, though?
That is the long game, Jenny. NVIDIA's CUDA platform is the dominant software ecosystem for AI development. When you buy an RTX 50 series card, you get access to advanced features like DLSS 4.0, which uses AI to upscale graphics, and even new, neural shaders that can use AI to generate game visuals in real time. It's like future tech now.
So it's not just about raw power anymore, it's about the AI smarts of the GPU and how that integrates into games and other applications. That's a pretty compelling argument for their cards.
Exactly. And what Atkinson is saying is that while you're gaming with your RTX 50 series, you're also experiencing the power of AI on NVIDIA hardware. This subtly trains more developers, more engineers on CUDA. It strengthens NVIDIA's software moat, making it harder for AMD or Intel to ever truly compete, because everyone's building on NVIDIA's platform. It's really clever, honestly.
So basically, our gaming GPUs are becoming covert AI training rigs? That's a wild thought. But here's something I found interesting. TechSpot called the RTX 50 series the company's worst ever, due to pricing and some VRAM choices, yet it led to this dominance. How does that make sense? That feels like a contradiction.
It's the irony, right? Despite some valid criticisms, like some models having less VRAM than competitors at similar price points, NVIDIA still controlled the narrative and the shelves. Their average selling price for the RTX 50 series was significantly higher than AMD's. But they moved units. A lot of units.
So regardless of negative sentiment, if you wanted a new high-end GPU in Q1, NVIDIA was effectively your only real option at scale? There just wasn't another choice, was there?
Precisely. The market was starved for new GPUs, and NVIDIA was the only one that could deliver them in volume. Supply beats sentiment when demand is high. And for those enterprise customers and AI researchers, the AI capabilities made even the higher prices well worth it. The AI revenue flywheel is just too powerful to ignore.
Okay, so this is a fascinating story of supply chain, strategic timing, and the leveraging of AI dollars. But does 92% market share, a near monopoly in essence, raise any concerns about competition or innovation in the long run?
Absolutely it does. The EU's Digital Markets Act is already investigating NVIDIA for potential self-preferencing through CUDA. There are legitimate worries that this level of dominance stifles competition and innovation from other players. If one company controls everything, where's the incentive for radical new ideas from others? It's a real concern for the consumer and the industry at large.
That's a fair point. For consumers, it could mean higher prices for longer, right? If there's no real alternative, NVIDIA can kind of set the terms, can't they?
Exactly. Gamers are already seeing 32% higher upgrade costs compared to a couple of years ago, which is significant. On the flip side, NVIDIA argues that this dominance allows them to reinvest massive amounts into R&D. We're talking almost $10 billion this year alone, which, they say, accelerates AI adoption for everyone. So it's a trade-off, like you said.
So they're saying they have to be this dominant to fund the future of tech. It's a trade-off then. Higher prices and less competition now for potentially faster innovation down the line? That's a big promise to make.
That's their argument. And it's a compelling one if you believe AI is the future, which, I do. The discrete GPU market might even shrink by 10% annually through 2028, according to JPR, as integrated GPUs get better and AI workloads shift more to data centers. But NVIDIA's installed base, their ecosystem, will just keep growing.
So this 92% isn't just a win. It's a strategic cementing of their position for the AI era. It's not just about today's gaming. It's about tomorrow's AI infrastructure. That's a powerful thought, Mark, how far-reaching this really is.
It truly is, Jenny. The secret to NVIDIA's success in Q1 2025 wasn't just making good GPUs, it was having them available, at scale, backed by an AI empire when no one else could. It's a masterclass in ecosystem control, really.
Well, this was quite a wild ride. From 92% market share implications to the nuanced implications of AI funding, it's clear NVIDIA is setting the pace for the entire industry. Thanks, Mark, for breaking down this incredible story for us.
Always a pleasure, Jenny. And thank you all for tuning in to the Tech Frontier. We'll catch you next time.
See you then.